Yo, what is going on YouTube? I hope you guys are ready. We are back with another video. So again, today we're going to be something a little bit different, almost a beginner's little life hack. Let's call it that. Today we are going to go over 5 tips and tricks you can apply to your trading to make you a better trader. Now before we get started guys, do us a favor, drop a like, drop a sub, help the channel grow. It helps the little algorithm machine and get us out there and grow the family. But let's jump right into it. All right, guys. So number 1, daily bias. Now I know this sounds so simple. A lot of guys always go, bro, but I know I have a daily bias. I use a daily bias. Why are you saying that's special? Now, very, very simple. What we want you to do is when you set up your chart, when you come and you sit down first thing in the morning, you anchor that text and you put there daily bias, and you look at the charts on a daily time frame. Remember, always a higher time frame because that's a lot stronger confirmation than what a lower time frame is showing you. You're gonna look there and say, okay, I am bullish or bearish. Now what happens when you start dropping down to a 15, 5, even the 1 minute, again, you're gonna maybe see a shift in momentum. You might look and go, wait, this looks bearish to me. I might look for the sell. But meanwhile, all that's happening is you're busy getting caught in the liquidity sweep of the low of the day before it continues bullish. So having that anchored text on the top right, bottom left, wherever you want it, just reminds you the whole time that is the move you should be looking for. Now, number 2, what are we going to talk about? Economic calendar. Why is this important? I'm sure you guys have all heard of it. You guys all know CPI, FOMC, NFP, unemployment claims. Guys, the list goes on and on. Now, I'm going to plug you very quickly. You guys can use investing.com. You can use Forex Factory. There's a handful. Personally, I just use Forex Factory. It's very easy as a consumer to find it, use it, and understand what is going on here. Now, all you want to do is understand, because I'm sure we've all been there. We've been in a trade. We're sitting in the blues. We're loving life. And all of a sudden, there's this massive bearish engulfing candle or bullish engulfing that takes us all the way to break even or possibly even to stop loss. And we just sit there going, what just happened? But meanwhile, it was a news event that you weren't aware of. So always being allowed to make sure you know when and where these news events are happening can prevent these things from happening to you. So go out, check out the economic calendar, and again, you can make sure your trading is safe moving forward. All right, guys, so now for number 3. Now, this is a very insightful one, I think. A lot of guys can use this. Some guys already do, some guys don't. Some guys aren't even aware MetaTrader can do this. But we're going to talk about drawing your stop loss and your TP to show you what you are risking. Now, Keegan, why would you do this? Now, very simple. There's a lot of guys to keep consistently use generic lot sizes. Again, this works in different strategies. Now, what does that mean? So very simple, it means irrelevant of stop loss size, when they always enter the trade, they enter in with the exact same lots. So how does this work? Now, very simple. So when we look here at MetaTrader, you guys are going to see when you enter your position, once you select the position, you are then able to either draw your stop loss and see exactly, if I place my stop loss here, the dollar value of what I'm going to be risking. And if I pull my TP, you guys are going to see the exact value of where your TP is going to be sitting. This way, at least you know if you're using those generic lot sizes, you will always know the exact point of the dollar value of what you want to risk and what you want the reward to be. All right, guys, so now after those 3, for the last 2, we're going to take it over to the charts. So come join me. All right, traders. So here we are on the charts now and ready for number 4. Now, what is number 4? Let's approach gold, because I know a lot of you guys all think you are full-on gold miners. You guys are obsessed with gold. So this is a little nugget for you guys. Now, when you trade with gold, you guys are going to notice this. It's a little thing we call the $5 grid. Now, very, very simple. You can mark this out manually. Maybe there's an indicator. I don't know. But we did it manually, and that's just how we tend to do it. Then you know it's done the right way. Now, if you guys know me, I trade support and resistance. But with gold, I've always said support and resistance works perfectly on higher time frames. Again, purely because we're seeing those psychological round numbers. So again, that's where the $5 grid comes in a lower time frame. So if we look at gold, how it likes to move here, you've basically got it marked out 25.90, 25.85, 25.80, 25.75. Then as you go up, 25.95, 2600. You guys can see the idea here. You can see now when the idea is simple, support and resistance. You trade to the one to find support, trade to the next, find support, trade to the next, find resistance, trade to the previous one. Simple as that. So we can see here with gold, very, very simple, guys. If we look at what happened here, gold from here, 25.65, broke. Traded to 25.70. Simple. Broke, tested, found support, 25.75. Broke, found support, 25.80. And this is a trend it continues to do the whole time. You guys can see the whole way how this thing moves forward doing that. These zones always being tested, these $5 grids, the breaks, next one, breaks, next one, break, find support, break, find support, continue. Very, very nice, easy, simple strategy anyone can use on gold. Now, we're gonna take this straight over to number 5. And this is relevant because right now, this is actually how I passed a phase 2 account. And secondly, most pairs, gold, indices, your NASDAQ, USD, a lot of them trading close to all-time highs. So quite relevant in today's market. Now, what do I mean by that? How do we approach all-time highs? So as you guys can see here, I've marked it out 2600. You can see over here, if we even jump to a higher time frame, let's do this for you guys on a 15-minute. You guys are going to see very nicely, there's our current all-time high, 2600. Now, what do we do when we approach it? Retail will tell you there's so much liquidity to the downside. If we look at this on a higher time frame, even there's all this momentum still to come down. You traded bearish, this was the pullback to continue bearish. But now what do we normally say? Again, very, very famous quote, a trend is likely to continue rather than reverse. So what are you gonna do when you approach these all-time highs? Very, very simple, guys. You're gonna see there, let's actually pull it back a little. That thing just absolutely ran. Let's just take that back. Let's go all the way to here. Now, quite simple. What we're gonna look for is as the charts approach, as those candles get closer and closer to these all-time highs, what you're going to look for is instead of us trading in and reversing, if we can stay close to all-time highs, the key is it is most likely going to punch a quick 60, 80 pip move. You're almost guaranteed. You want to see this thing drive, and if it reverses, you know what? Kill the trade. But if this thing just runs, you are in the clear. Now we're going to see what exactly happened over here. How did I pass my phase 2 account? Very simple, bang, and there you go. Drove right through. Let me get rid of that one over there. We basically traded in. We found a little bit of support or resistance, didn't give us the reversal we were looking for, continued all the way through. As I said, you want to see that drive all the way to the top, and there you have it, ladies and gents. We can basically see this come into play here. So as I said, that was the trade there. You can very, very simply mark it out. If you guys know me, nice 30 pip stop. Now, simple as that, 1 to 2. Thank you for coming. And that is how we passed our phase 2 trading all-time highs in gold. So remember that, guys, the next time you're trading the market and you approach all-time highs. Again, guys, that is the close of this video. So please if you haven't yet, drop a like, drop a sub, share this video. Again, it helps the little algorithm machine on YouTube, helps the channel grow, and we're gonna see you guys in the next one. Peace and love, baby.